Warren Buffett's 10 investing rules. Let's have a look. Hello everyone, Florian.Heise here, and welcome to another episode of HeiseSays. Let's have a look at this article from Yahoo Finance, which is discussing Warren Buffett's 10 investing rules. So his net worth is 100 billion, and these are the 10 rules that got him there. Let's have a look at this. So Warren Buffett is now worth 100 billion, as shares of his Berkshire Hathaway hit all-time highs on March 11. The Oracle of Omaha still lives simply, though, and his strategies for smart investing and amassing wealth aren't too complicated either, and they even hold up during these tough times. But if it's so easy, you ask, why aren't more people as incredibly rich as Buffett? Because his approach takes the kind of discipline, patience, and instinct that many people either don't have or are unwilling to develop. Here are 10 rules that have helped the Oracle of Omaha find and sustain success. Number 1, start with good communication. Buffett's first key to prosperity has little to do with picking stocks. He says you need to become a strong communicator. Wield words as your most important tool. Without good communication skills, you won't be able to convince people to follow you, even though you see over the mountain and they don't, Buffett once told a Stanford MBA student. While this may seem like sage advice for financial planners, it's good for helping anyone develop leadership skills and the ability to think in stressful situations. Let's see when this turns into an ad. Look forward, not in the past. Buffett famously stated in the 1950s that the investor of today does not profit from yesterday's growth. This maxim still holds true today. According to Buffett, following past trends is much less important than identifying new opportunities. When deciding whether to invest in a company, focus on what's in its future, not its history. Don't stay stuck in the past when it comes to your mortgage either. Here we go. If you've had your home loan for more than 1 year, yeah, here we go. So this is where they sneak the referral links into these articles. I mean, that's good advice. If you need to every month shop around for your mortgage, if you can, if you're still on a variable, get a good deal, guys. You know, we've locked ours in, so I've lost that fun of ringing up. I'd be sitting on the phone for 40 minutes while I'm drafting to get a 0.1% reduction in my mortgage, but bloody well, I would do it. When investing, innovate, don't follow. Adopting a herd mentality is a surefire way to get middling results, Buffett believes. You need to divorce your mind from the crowd, he has said. It's tough, but you have to break out from the pack by developing your own investment strategies based on your knowledge and experience. To be a successful investor, you must divorce yourself from the fears and greed of the people around you, although it's almost impossible, he says. And here's the link. Get financial planning advice. But one thing I would suggest is you'll often have people that'll just, will want to have confirmation bias. If they've made a decision, they will go out and look for confirmation bias. You see that particularly in the crypto space. They'll try and get more, confirmation bias. They'll look for it. So you got to be aware of that. So live frugally. I mean, this is just normal advice, honestly, living frugally. Buffett famously lives well below his means. He's been known to drive an older, modest car. He still resides in the house he bought in Omaha, Nebraska for $31,558. 58. Well, that would have been good money, big money back then. And he picks up his breakfast at a McDonald's drive-thru almost every day. You can follow, well, that ain't healthy, mate. You can follow his example by looking for new ways to stretch your dollars. For example, while shopping for life insurance. There's the plug. I mean, come on. And browser extensions. I mean, this is the way to make money. We got to get the little gems from this and kind of laugh at how they're making coin. Always be willing to learn new things. Yes, that's true. Buffett likes to say that knowledge accumulates just like interest in a bank. He starts each day with a newspaper and he reads books on various topics each day. Consuming information will not only influence your investing, but it will also prepare you for success in life. Soak up what others can tell you about new technologies and strategies. Try to avoid learning new things, risk becoming obsolete. Well, there's one YouTuber I've started watching, I think Joshua Fluke, and his whole thing is about, he talks about crappy jobs. And it's just interesting to see this American corporate culture. It's something I haven't been exposed to. I started my own business after I came out of the Architectural Practice Academy. So I had a little bit of taste of corporate culture while I was a student working, but then I've kind of, gotten away from it, which is probably good because you can tell by how opinionated I am, I probably wouldn't suit the PC bullshit of corporate culture. But one thing he always says, it's not about job security, it's about skill security. And I think that's a fantastic thing to take with you. It's about your skills. You need to realize that your skills are what can lead you towards the next job. And maybe your skills need to be sharpened up, or you need to improve them. Maybe they'll become obsolete. In architecture as well, there's already now AI bots that can instantly do just all these it's not even AI, it's algorithmic programs, okay? It's not artificial intelligence, it's not self-aware, it's just algorithms. And they can take all the town planning information and spit out DA options, one after the other, much faster than a person ever could. So, there's the thing, that's probably not where I'm going to add more value. I'm seeing it, okay, as an architect, I'm more complex solutions where you can't really just tick the boxes. So you got to think about that with your skills too. So know when to fold them. Don't get the wrong idea. Buffett doesn't sell stocks when he has to, or does sell stocks when he has to. Despite his overall success, he has bet on plenty of clunkers. The trick for long-term investing success is to know when to walk away. Buffett learned these lessons as a young man betting on horse races. He tried to make up for the losses by increasing his bets, and he lost more money. Recognize when a stock is a genuine loser. If you can walk away and minimize your losses, and there we go. They've got an app here about investing spare change in your portfolio. Now, I've encountered that when I've invested in some IPOs back in the day, in the IPO craze, where they just crashed. You've got to know when to step away. So think long term. Buy and hold is a common long-term investing strategy that calls for sticking with a stock even if it's having a bad day or month. Buffett's approach might be called buy and hold, as he likes to tell his Berkshire Hathaway shareholders. A favorite holding period is forever. He doesn't mind when a stock takes an occasional tumble, because those are good opportunities to buy more shares at a discount. That's the thing. You just got it has to do with your time frame, and just your appetite for risk and your psychological profile. Couldn't do day trading, I don't think. I would just be staring at it too much and get too stressed. So I'm just looking long-term horizon. Nice and boring. Never invest borrowed money. When investing, use your own money, Buffett says. It's crazy to borrow. It's insane to risk what you have, a need for something you don't really need, he told CNBC. That's it. People who can't afford the food for the kids. There you go. If you borrow to invest, your strategy will too closely be tied to your need to repay the money. Some investments require long-term planning and holding out for growth, which is difficult with a debt hanging over your head. Dividends are the key to long-term growth. Warren Buffett loves stocks that pay dividends. His company, Berkshire Hathaway, gets hundreds of millions of dollars each year from Coca-Cola in the form of dividends. Dividends come from reliable companies that consistently meet or exceed goals. Their stocks may not make you a lot of money quickly, but their dividends can put your investing on autopilot. Other high dividend paying companies include Caterpillar, AT&T, Verizon, and investment firm BlackRock Capital, though ironically not Berkshire Hathaway. 10. Remember, anything is possible. Buffett is known to plaster his walls with what he calls instructional art. This includes newspaper front pages with screaming headlines about stock market crashes. They remind him that in investing and in life you need to be ready because anything can happen. If you keep this in mind, then you'll proceed with caution and make informed decisions about your investments. So there you have it, everyone. 10 tips from Warren Buffett and some referral links for good old Yahoo Finance. But some good rules there nonetheless. What do you reckon? Are you a fan? Do you follow these? What do you think about his take on dividends? We'll have to see. Has Buffett gotten to crypto yet? That'd be the day. Anyway, guys, thank you all for watching. Please like, share, and subscribe to the channel. If you're a fan and enjoy the content I create here, there are a few ways you can support us. You can join us on YouTube or Patreon. You can support us using our affiliate links from Amazon, eBay, Independent Reserve, or Aussie Broadband. You can buy merch from HeiseSays, use Gold Pass from the Perth Mint, or support us via PayPal. Take care, have a great day, I'll see you next time. Bye for now.